Legend. Small touch.
All right, let's do that. Let's touch it down even a little touch. Jason's got them sensitive ears. How about then? Is it? Can you even hear anything?
Yep.
Should be okay. Should be okay. Is it better? Like once I'm coming through louder and more dominant, without being distorted or anything like that, you just let me know.
Yep.
Trying to set it up so that when I start recording and getting the video on, etc., that everything is everything. All right. So give me a sec. Oh, let's go. So we're gonna break down GU from the top. Okay. I'm not going to leave all my notes on here. I'm going to start. And I know we've been looking at this over and over and over again, but it doesn't matter. It allows us to see the patterns and understanding, and we'll apply it to another pair after we've finished. All right. So we've been looking at this from last week. In fact, I'll leave this on now. Okay. No, I'm not. I'm going to delete everything. I want it to be the case. If you've just found this particular video on YouTube, that you'll be able to understand how powerful the strategy is and how to understand the markets and be intrigued and interested in getting involved in uni sessions and being able to learn this powerful skill. Okay. So first and foremost, these are the markets. The markets we're looking at is the Great British Pound against the US dollar. All right. So there's a few different things we can look at to help influence what we think is going to happen between Great British Pound and US dollar. Who can name me two different markets, or two different charts that we can look at to help us get some sort of opinion about what may be happening between the Great British Pound and the US dollar. Does anybody know? Dixie sounds good. And what's the Dixie? Who can tell me what the Dixie is?
Dollar index.
It's the dollar index. So it's essentially just the index of just what the dollar's doing. And then we can also look at the flip side, which is the BXY. If we might call it the BIXY, which is the British Pound Index. Now we're going to look at that in a minute, but first and foremost, we're going to do some market structure and some basic understanding of price action. Okay, so I don't know who you are. I don't care who you are. I don't care where you're from. I don't care what language you speak. I don't care if you've never ever seen a chart ever before, but I think we can all agree that this market is going down, which we call bearish, which is making lower lows and lower highs and lower lows and lower highs and lower lows. And I know that straight away, the family members in Unity can identify how these retracements, just by looking at it by your eye, you can see these retracements coming to a level that we always identify, we always, take note to. This little retracement level here, boom, comes down here, this little retracement level here. Each time we see this market retracing to a level which we like to call equilibrium, or simply 50% of the impulse. This is the impulse from here to here, and look, on the lips, all right? Let's go and have another look at it, all right? Let's go and see it again. All right. This is the impulse from here to here. And have a look. Straight on the lips. Okay. Now, even though I'm looking at this since from the start of time to 2007, and you're like, okay, so how is that relevant right now? Let's go have another look. Here to here. And then let's get rid of the wick. All right. Let's get rid of this little crazy little volatility wick, but around the same kind of area. All right. Now, I know someone's saying you're going all the way back to the start of time. But the point is the market is fractal. I mean, the market does do the same things over and over and over and over again. Now, we are currently looking at the market where every single candle is 1 week in time. Now, we are not taking trades. We're not position traders holding trades for years, etc. Okay, but we are just showing an understanding of which way the market's going. Now, we drop our time frame down to our daily. Now, this is more relevant to us, all right, as people that want to get in and out of the markets as day traders, okay? So now we're looking at a chart whereby every single one of these candles are a day in time. And if I was to draw some lines, I'd draw a line looking like this, okay, first and foremost, and you draw a line looking at that if you understand our strategy, all right? To understand how this market was bullish. It was pushing up, yeah, in this range. Now, when you see us drawing lines on the charts, first and foremost, you understand that these lines are just guides. They're not, okay, when this market gets and touches that line, it's going to do this. They're a guide to show our eyes and to remind us what's going on. So the market was bullish, making higher highs and higher lows and higher highs and higher lows and higher highs. And something changed. Something changed here where the market made a big bearish impulse, breaking structure. Now, what is structure? For simple terms, you're going to say that structure is every point where this market creates a retracement, creates a low. Yeah, creates a little low, yeah, and vice versa. When the market's pushing in opposite direction is the high points. It's the mountains and the valleys. Yeah, markets don't just move in straight lines like this. They move in waves and they create a structure. All right, a structure of higher highs and higher lows, or higher highs and higher lows, or lower highs and lower lows. From the time you understand that, every time the market moves, you will understand on every time frame practically, the market will make sure it makes this structure. Now have a look at this big push here. Boom, breaking structure. This is giving us an indication that for whatever reason, the markets want to be bearish. They want to go down because they're pushing past previous structure. Especially when we take into consideration this big, larger line that we put here of potentially how the markets have been trending down. Now, I put this market on the weekly time frame, on the weekly time frame, so it might not be as accurate as we want it to be. So I can try and get back in and make it a little bit more accurate. And what do I mean by that? I mean just touching the data points a bit better. All right, just touching the data points a little bit more accurately, a little bit nicer. I'll touch that one in here. Someone's saying, Jay, how do you decide which data points which? It doesn't matter, because these are just lines on a screen. It does not matter exactly what we're talking about. It matters about the general energy of which way we're going to see. How do you draw the bottom end? You draw the top end the one way. Personally, guys, I draw my trend lines on one edge that I see got lots of data points that I can, and I use a parallel. I pull out a parallel line. All right, so I hold control and I pull out an absolute parallel line. Okay, now back to our daily. As we see this big breaking structure here, and we spoke about it, the reason why I mentioned that 50% retracement is because I believe, as we've been identified and we've been trading, that this market may want to make a 50% retracement into this level. All right. I mean, you can go and you can rewind the sessions. They're in chronological order. You can see what I said last week, Monday. And we took the trades all the way from last week, Monday, from around here up into these levels. When it came back in here, it rebalanced back into this area of, where previous supply was. And then we push back up in here and we are going towards our level. Okay. And the market moves in waves on its way there, but we're definitely going there. Okay. Now, another reason, even though I just put at the 50%, you're writing that down and you're thinking to yourself, okay, Jay says 50%, okay, you put that down on your paper. But not only that, it can't just be the fact that we're going to pull out a Fibonacci, it's going to say 50% and that's it. When the market gets there, we're going to hit the button. No. We also need to understand and assess information. Unfortunately, as I've mentioned before, we cannot look forward in time. I wish we could. Yeah, I wish we could look forward. Well, maybe I do, maybe I don't. All right. But in this instance, it'd be great. The only place we can look is backwards to look for historical data. Yeah. For some reason, it seems like the market likes this price point. And this price point happens to be on a key level 1.26000, around that area there. Look, the 50% line is practically exactly on 1.2600. This line that I pulled out from the top of here to the bottom of here, this range, this green 50% line happens to be nearly exactly, look, I don't think it can get any more exact than that. Look, I'm trying to put my line on top of it, about 1.26 dead. So personally, I believe, and I have believed, and I'm standing by my analysis, that this market wants to push up, make this smaller. Yeah, wants to push up. I'm going to try and put some data points in here. All right, we'll take this one. All right, wants to push up into this 50% area, and then maybe there it will start turning the boat. Now I say maybe because I do not have a crystal ball. All right, because the batteries on my one have run out. All right, and we have to trade what we see. We don't know for sure that the market's going to turn around here, but we've got our ideas. All right, let's drop our time frame down to our 4 hour and see what this market's been doing within that 4 hour impulse. Within that 4 hour impulse, look, this market's been pushing up here. It actually didn't quite get back down to the bottom of this range. Yeah, started doing something else over here. Now sometimes you see me do this. What have I done? I've put out another parallel line. Because within ranges, sometimes the market narrows. All right, it narrows. All I'm doing is I'm identifying what I see. You understand? There's no, oh yeah, but no, the market's moving in a certain range. I want to identify that, especially if you've got multiple touches doing something else. And we've seen that many, many times, that sometimes the market narrows. Either way, from here right now, my bias right now is ultimately like this. Now, if the market doesn't do that, then it doesn't matter, because I'm not just going to hit the button when it comes here. I'm going to wait for some sort of confirmations. And how we confirm immunity, how we confirm, make a decision of whether we're going to get in the markets or not, is we want to see a few things. Okay. Now, sometimes I've referred to it as BRB, break, retrace, and break again. Or ICC is an indication of where it wants to go, and a correction. Then we want it to like continue in a direction. Okay, so let's have a look and see what's going on. I'm going to drop my time frame down. So I'm going to put a little line in like so at the moment. Just looking at what's happening at the moment. And this is just a random angle. Okay, but I want to put that line in just in case the market starts to break that level. Okay, as we see this little acceleration in this direction. Okay, all right, let's drop our time frame down to our 1 hour. All right, so in our 1 hour time frame, let's have a look and see what's going on. Oh, the market was bullish here. Look, making higher highs and higher lows, broke this structure. And then the market overnight in the Asian sessions, have a look in the Asian session. Can you see that red line over here? This is the Asian session. All right. The market started to go sideways. All right, in here. Now, right now, this minute, I know because I was looking at this yesterday, having a little glimpse to see what it's doing. I want to see whether or not it's going to just, tap into this level of structure that's been broken. I'll show you in a minute, and continue a bearish push, but I actually don't think so. I was in here for the buy, and I just closed it down yesterday before I went to sleep, all right? Because I thought this market wanted to come back into this level, but right now the question is, are we going to turn around right here? Which I don't think we are. We're going to push back above and actually get to our 50% level, all right? I want to drop down. So I've drawn this little box around here. This little box around here is identifying how the market was going sideways in this little area here. And if you guys want me to tag these different things and start drawing tags, etc., but you don't need to. I want to flow with me. I want you to be able to understand and look with your eyes and see what's going on and flow with me. Understand that what you're looking for is bullish, consolidation, bearish. You're looking to just your eyes to pick up on what's happening in the markets, how we can see the market's pushing up, pushing down. The reason why we put these lines in as such is so because when I'm zoomed in here now on the hour, I can still get these lines, understanding where my 50% is. This little eye angle, I want to get rid of this for now. All right, it's a bit confusing. All right, we can see this angle this market's been trading up with it, etc. We still got a bearing on what's going on. All right, let's go to our 15-minute time frame. Have a look. The market pushed down here, tapped our line. This isn't a line I've drawn because it's tapped here. This is a line that was drawn from this angle of this market here when we started seeing the market stopping here and coming up here and making this kind of energy. All right, so we're watching it at the moment. So we're just looking at it. You just interesting. And like I said, my bias is that this market wants to get in there for a sell. All right, the market broke down here, definitely captured any kind of liquidity that was sitting below here, and it's pushing up here. And we know there's some liquidity above this little area here. But like I said, I mostly believe that this market wants to get up in here and then start turning the boat. Okay. What would I be doing right now this minute? Well, like I said, my bias is to sell it. I wouldn't be doing anything until I get into my area of point of interest, personally. Okay, personally, that's what I wouldn't be doing. All right, now on an hour time frame, because I'm on an hour, every candlestick is an hour. I want to understand this impulse. Okay, this impulse is valid. It's an area of interest. And why did it retrace back in here? Why did this market retrace back? What reasons might this market want to ever retrace back into this level? Yeah, let's imagine that you was down here. This was yesterday. This market's made a big old push outside of this zone. Okay, because yesterday, if you can remember, I was saying, look, I'm not interested in getting into this market until it breaks a level. Yeah, and that level was around here. Okay. So I'm not interested in getting it till it breaks the level. I said, yeah, it could come and do the hokey cokey down there, but I'm a bit concerned, if until the market gets, when the market's pushed down here and it's made a retracement, but it hasn't continued down here. Yeah. Now, at this point, when the market was pushed down here, I and yourself would have identified the imbalances that large push has caused. It caused inefficiencies in the market. So straight away, my alarm bells are ringing, and I'm thinking to myself, you know what? Maybe that market would like to come back and close up those inefficiencies. That's what would be going through my head. On a smaller time frame, you can see a lot smaller ones. It's broken down into a couple of inefficiencies. Okay, like so. And if you want to go like so, it doesn't matter regardless of however you want to look at it. There's inefficiencies, imbalances in the market, and the market wants to rebalance. And as we can see here, if I hit play, nam, 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 nam. The market has come back and closed those inefficiencies. Got rid of those imbalances. Okay. Now, when we saw this huge break here, this could have been an indication, breaking this structure here, that the market wants to be bearish, wants to break, come back in here, and then continue down here. But if we don't see anything making that continuation, but that's not what happened. All right. That's not what the market wants to do. All right. So at the moment, the market has pushed past that level, closed some additional imbalances in here. There were some smaller ones. Now, guys, if you find it difficult to be able to identify where these imbalances are, because some people do, they're newer to it, their eyes are not drawn to these imbalances. There is something here, it's called a fair value gap indicator. Literally, that's what it's called, fair value gap. It's by someone called Spaceman. And when you hit it, it will identify all the imbalances. Okay? The ones that are closed, they will disappear, or you can put it on a setting that will actually show you ones that have actually been filled already. All right, which is unnecessary. You don't need to see ones that have already been filled. Okay. But this little indicator here, if you can see it here, going on and off, going on and off, is identifying the little gaps, little imbalances. You see? See, like this little one here, it's just identified because there's a little imbalance in here, etc. If you need it, you can use it. You should not need it. Your eyes should be able to do that work for you. Okay. So the question I'm asking myself very simply is, now we've come and closed up this imbalance and tapped into a little area, is ultimately 50% of that previous consolidation as well. Is the market going to turn around and break structure and decide it wants to continue being bearish? Or are we going to push up past these points into an area of interest that I've had my eye on anyway, which is this 50% area? And understand that how I called it an area. I didn't call it a line. It's a zone. Yeah, it's a whole area of interest. Okay, it's not just a line. All right, but I'm not going to draw my chart to confuse things more, make it even uglier. So right now, the question I'm asking myself quite simply is, are we breaking above here? Meaning that we wasn't coming back in here to just close imbalance to continue going bearish. That this intention, this push, this bullish push is a bullish push, capturing the liquidity down here and then pushing up to capture the liquidity up here before capturing liquidity and hopefully turning around and making its way and getting back to the path of its real journey. Because in my opinion, going all the way back up to the daily, this whole push has been a retracement. Has been a retracement, okay, of where it wants to, of this overall direction. So overall direction is bearish, as seen by this line. The market has been breaking structure, substantial big daily, big weekly structure, boom, in this direction. And this retracement was always identified as a 50% retracement or correction for hopefully the market to, all right, continue doing this stuff. Okay, so, you know, that is definitely where my energy is at. That is my overall narrative of what I want to do with this market. And on a smaller picture, as I said, if you identified a long time ago, you could sit around and wait purely for that market to get back up into this 50% level and take no trades. You could have. All right. And that's fine. It's very patient trading that you only want to take that level. But, you know, on a smaller time frame, and when I say smaller time frame, I'm not talking about anything less than understanding what's happening on our direction. When we was down here, we identified that we could trade that retracement back into that level. Understanding that it's not a 10 out of 10 out of 10 out of 10, but it might be an 8 out of 10. Because on a smaller time frame, when I say small, I'm talking about hour, 4-hour structure, we was making higher highs and higher lows and higher highs and higher lows. And let's have a look at some metrics once again. Have a look at some metrics again. Watch. I'm going to grab my Fibonacci tool. I'm going to pull from the bottom of this range, bottom of this impulse, okay, to up here. Yeah, bottom of the impulse, as in this is the bottom of that impulse to here. We're seeing this 50% area. Let's go and try and pull it out again. Yeah, from the bottom of this impulse to here, we get the retracement back into this 50% area. Should we go again? Yeah, from the bottom of this impulse to here, we get this 50% retracement area. So do not sleep on the 50% retracement, the equilibrium area, because we see the market does it time and time and time and time and time again. Does that mean that when it gets to 50%, you just hit the button like you're playing Snap? No. It just means you're very, very aware of that market retracing back into that level, yeah, and seeing that there's a potential reaction around that area. So when you start seeing structure being broken around that area, you can take action. Now, this push down here, if it was going to turn around, in my opinion, would have come out around here. Then again, there's some imbalance in here. It might have come up here and been stubborn to close that imbalance in here. It may do. It may have done. All right. But like I said to you right now, the question I'm asking myself, quite simply, and you should be asking yourself, is, are we going to be breaking above here? Going into our area? Or is J wrong? Or is this here, this little push in here, considered as in the 50% area? Because we've seen a few times it hasn't quite got to the 50% or it's been a little bit over it. And if I was to draw a big green box around that 50% area, are we saying that this little touch in here is it in the 50% area and now we are actually ready to go? I don't particularly think so. All right. However, I cannot marry an opinion that I've just made out of absolute thin air because my gut doesn't think so. I've got to trade what I see. So right now, the market here, as you see on the 15-minute time frame, is making higher highs and higher lows and higher highs and higher lows and higher highs and higher lows and higher highs. What would I be waiting for, guys, for me to get some sort of inkling that maybe the market's doing something else? What would change? What would I be possibly waiting for as a trader? Somebody tell me.
A break of structure
or indication. Yeah, break of structure, indication, and change of the character. I mean, why would I just say I'm selling from here? On the basis of what? Look at this white line. This white line ain't even telling me nothing about selling. So I at least want to see some sort of it to change its behavior. Then I'm going to be like, okay, it came up into this area, now it's changing its behavior. But until then, I cannot take action. I don't know. I don't have any information. I cannot just bomb that area. Nobody's told me. That has given me clearance. There's no confirmation that, the enemy's actually there. Can't just blindly carpet bomb the area. I'm going to hurt myself. All right. So right here, that's what we're looking at. We're saying to ourselves that we understand why this market has made a retracement back in here to close up all of these imbalances from this big push. If you go on a larger time frame, it looks a bit more obvious. Big push. 1, 2, 3 hours with strength and speed. Yeah. But the question is, was this as a push down here to capture some liquidity before this market actually makes a final push up in here and then starts breaking down? Well, I don't know. I can definitely see that we've closed an imbalance, tapped into a beautiful 1 hour candlestick zone over here. Okay. And the market may turn around for a little bit, may have a reaction to this candlestick zone. It may do. All right. Have a look. It already has. Look into this candlestick zone here, this 1 hour bearish engulfing candlestick pattern over here. It's already had a reaction to the tune of 18 pips. But does that mean that that reaction is the be all and end all and now it's going to continue going to hell? No, because the structure hasn't broken. Let's go to a 15-minute time frame. No structure is broken. Let's go to a 5-minute time frame. No structure is broken. Even on a 5-minute time frame, we'd be identifying this as some structure. All right. Okay. On a 5-minute time frame, it's doing this. Look. Yeah, it hasn't broken no 5-minute structure. And then you start getting into ridiculous realms. I'm not gonna say ridiculous realms. Smaller than a 5-minute time frame, which is the only way I can explain it to you guys is it's very windy. All right. And for new traders, when you get down to the 1-minute time frame, you're dealing with a lot more information because there's a lot more candles and there's a lot more noise. So though I've seen a break of some minor 1-minute structure in here, okay, where the market broke here, broke that little 1-minute structure. If you can't see the structure sometimes, guys, just turn to your line chart. Okay, so you see this little retracement here. It's not taking into consideration the wick, but that was structure on a 1-minute time frame. If I was to draw in a little range in here, this 1-minute impulse is looking something like that. You see? Looking something like that with another other side, you know, something like that. Kind of ugly, something like that. All right. When you get down to these smaller time frames here, there's a lot more noise, and you've got to trade what you see again. You've got to trade to structure. So if I was in this 1 minute trade from here to here, you're going to be concerned about all of these levels. All of these levels are concerning you. This market is going to come down here and go back up. By the time you got in, you're going to be having to get out. Now, you can do that as a scalper, be able to get in and get out, but you've got to take into consideration the cost of transaction. Every time you get in and out of trade, they're going to charge you. You've got to take into consideration your spread. Your spread's going to eat into the small market. Look, this little distance is tiny, guys. You know, from here to here is like 9 pips. From the time you take away a pip and a half, 2 pips for spread, yeah, then you take away the fact that you execute a little bit late. You take into consideration, you know, these other factors, like getting in and out, the cost of the transaction, the spread you got to pay. You know, it doesn't get necessarily. It's not necessarily the best place to be. All right. So we'll stay here on the 5 minute time frame. It's a bit calmer. It's still quite small at the 5 minute time frame, but this is a little bit calmer. Now, at the moment, what we're seeing is this market has tapped into a candlestick zone and had a reaction. If that reaction from that candlestick zone starts coming and starts to violate structure, then we're going to have our one eyebrow up. We're going to do our let's go and get it. We ain't whipped him out for a long time. Let's go and whip him out. Yeah, let's go and whip him out. Yeah, ready? Let me just go and get it. Let's go and get it. I'm going to need this one. I like this one. Pause, yeah. Boom. All right. Oh no, I'll tell you what, I want a big one. Pause again. Let's go over here. Let's go size. Let's go large. Let's grab this one. All right. When that breaks the structure, okay. When that breaks the structure, when that breaks the structure straight away, that's what we're going to be doing. As soon as we see the structure break here, we're going to be going, okay, we're having a look. We're not making no decisions yet, but we're having a look. As soon as we break this structure, we're like, okay. But more importantly, what would be better for us is that this market actually breaks outside of this range, this trend. So at the moment, we're trading within this yellow range. This is why we draw them in there. It's drawn in there. So ultimately, though, yes, we could turn around and start getting excited when we're breaking this smaller structure here. It might be better that we be patient if you want to see that bolt turn and wait for this swing structure in this area. That's the area, the swing right at the bottom of that range to be broken. Because it would not only be breaking that swing structure, but it would also be breaking outside of this yellow line, outside of this trend. Yeah? The market was doing something and trading within a trend. There was a nice rhythm to it. And all of a sudden, boom, man, bump the decks and we're outside of the trend. All right? And that's going to give us some sort of, okay, maybe now is the time that we could potentially get in for a sell. Yeah, it's the same principle on all time frame, on all things. If I was dropping this down to the 1 minute time frame, I'd say the same thing to you. Look, I would have been saying that this market was trading up within this impulse. I'm going to show you. I don't want you guys in here yet. This is more the advanced strategy, okay, to be able to go and understand it and take trades on a smaller 1 minute time frame. I'd be saying the same thing, saying this market's trading within this range. Everything within this range is still bullish. I actually want to see it break. Have a look at when it breaks. I'm going to go into the seconds if you really want to see, because just to show you how fractal the markets are. It's when it breaks this structure. Have a look at the structure. The structure is here on a 30-second time frame. This was the break. This was the retracement, and this was the close below. But it's also, what am I going to say? Where is it also? Somebody's listening. Where has this occurred also? This whole energy. Where has it occurred? That's going to make me think to myself, maybe, I can do a little sell action. It's occurred outside of the range of this blue impulse. So it's no longer in this trend of going up. This whole situation that has happened where it broke structure, retrace, and close below, it's outside of the range. And then what's happened since? It's got giving you profits. It's making you monies coming down here. So therefore, there's no difference in that same strategy on a bigger picture. Ultimately, I prefer to see this happen outside of this range, showing that it's broken this swing structure over here and it's doing something else. That's a safer trade on this time frame. And if I was to move my time frame up, we'd go again. We'd turn around and say the same thing. We'd say, look, boom, is in here. You know, making some, look, here we can still consider this outside the range, maybe taking a 15-minute. But if it was on a bigger time frame, maybe an hour, we'd be wanting it to break outside of this little level here and start doing something outside of this range. And what is the range? It's this line here, this angle that we put in here. It's the same over and over and over and over and over again. And your only job is to understand what's going on. Understand where you are and what's going on so that you can make good decisions. It's going to be virtually impossible for you to make a decision of whether to buy or to sell if you do not understand how to do what we've been doing from this morning. Understanding market structure, understanding these 50% levels, understanding these key levels, understanding that there's imbalance in the market might push up. Even if it wants to go down, it might push up first to close in balance. Now, right now, the question I've asked is this market going to close above here or is it going to close below here? All right? That's what I've asked. I don't know. I do not know at this moment in time. I don't know if this market wants to just tap into here. Yes, it did tap into a lovely candlestick zone on the 1 hour time frame, I believe. Yeah, let me mark that so we don't have to guess next time. All right, lovely candlestick zone on the 1 hour time frame. Yes, and that might be the signal that this market wants to go and start doing the madness. But I'm a bit concerned because I've got this 50% level over here that hasn't quite got touched. This is really where I want to see some, real green flag for the sell action to kick in place. In the meantime, yeah, it could go up and down and do lots of stuff. We are still currently maybe about 80 pips away from that 50% area. This market only moves about 80 pips a day. All right. So even if it's going to do this, it might only be the push up into that level. It might not start rolling and going to hell because the market doesn't have that much juice in the tank. Unless we've got some substantial news, red folder news, that's going to swing that market and throw it left, right, and center. Okay? So there you go. So right now, even me saying that, if I understand that the average daily range of this market is about, between 70 and 90 pips, all right? Then me turning around and saying that I'm looking to sell this market from this range here means I'm not doing it today. Unless something really dramatic happens and we see a quick spike, just gets up into here quite quickly and starts doing something, it's very, very possible I am not going to be able to get involved in this overall move that we've been looking at from last week, Monday, today. So the only trade that might be on the cards is if this market is stubborn and it's first wanting to do something else, come down here first, all right? Or if we see the opportunity that this market breaks structure, does something, and we feel like we're going to trade into this level. But these wouldn't be 10 out of 10 trades. These would be trades, there'll be 7s, 6s. Yeah, which is what it is. Okay, it's not all the time that we can take 10 out of 10 out of 10 trades. Anyone who tells you that, but you can do it. But you have to be very, very patient. And as somebody who's learning to trade, what benefit is it going to be you taking a trade every 2 weeks? How's it going to benefit you? If you're only taking 10 out of 10 out of 10 setups, guys, let me explain to you what 10 out of 10 out of 10 setup is. Because there's somebody on the session, there's somebody on watching our this recording, and they're like, what's he talking about 10 out of 10 out of 10? What is he talking about? Well, a 10 out of 10 setup is quite simply this, guys. It's simply that the market, for argument's sake, how should we do it? We do it in a sell. The market is overall bearish, like so. Okay, the market's doing this. On a bigger time frame, the market is doing this. It's coming down from it. It's pushed in here. And it's doing this, it's doing this, it's doing this, it's doing this, it's doing this. Okay? And within this larger impulse, the market, so I'm going to make this nice and thick, like so, and I'm going to fade it out, all right? So I want people to understand this and have a very, very clear understanding of what I'm talking about, all right? But then the market is also, whilst it's doing this, and we're going to use this impulse here to show, what's going on, is that actually, in fact, we'll do it like this. No, we'll do it here, all right? This market is doing this. Not fantastic. Well, have a look. We're going to do this like so. And we're going to make this thinner. And we're going to brighten it up. Like so. So within that impulse, there is another range doing this. Have a look. We'll make it a different color. All right. Now, we understand some basics. The basics we understand is at the top of a range. At the top of a range, we are interested in sales. Why? Because the market is expensive. Forget about GU. Think about this a market for anything that you're interested in. At the top of that range, it's expensive. Look, 3 weeks ago, the price of, the Air Force Ones were £80. And then 3 weeks later, looking at it, and you go to the shop, it says £140. You're like, rah! All those Air Force Ones that I bought 3 months ago at £80, I might as well sell here, because now I'm making £50 on each Air Force One. I'm killing it. You're interested in selling because it's expensive, and vice versa. When you get down here, you're looking back 3 weeks ago, like, right, Air Force Ones were 180, and now they're £80. I'm going to be buying because they're down here in this area, which I'm going to make green to symbolize buying. They are cheap. Yeah, they are cheap. Yeah. And this is basically how the markets work. People want to buy cheap and sell expensive. So when we're seeing this impulse coming up here, we understand that at the top of this bigger range, we want to sell. We can't just sell here. We cannot just hit the button here because there's no confirmations that the market's actually turning around. For all you know, the market just has to be stubborn and just start going up here to space and you lose your money. We wait for the confirmation, seeing this market. Watch. I'm going to make this green or red. All right. The market starts to break structure and push down here. So once again, bearing in mind, we understand we want to take a sell from the top of the top of the top. So this is the first top. This little area here, which I'm going to go and I'm going to label the top of this bigger range. Here's the first top. Top one. Okay. Then when the market pushes up here and we get into the zone, yeah, let me get my little boom. We figure this out. Okay, we're at top of a zone, sell territory, interesting, but we can't hit the button yet. Then we see the market breaking structure, doing this. Now we've identified. Have a look at how simple this strategy and this understanding is. We're now at the top of this range here. Have a look. Let me make that red. Let me make it a little bit brighter so someone can see it at home. All right. For whatever reason, it's not let me do it any smaller than that. I wish it could. Oh, there you go. So at that point in time, we're thinking to ourselves, okay, top number 2. We're in this area here. This is the top of the top. So for argument's sake, let's put some time frames to this. For argument's sake, this could be the daily. All right, just for argument's sake, this could be the daily. And then this one here, for argument's sake, could be the 4-hour. Yeah? And then let me explain something to you once again, because the market's a fractal. Oh, it's not even letting me get over there. I'm taking up too much space. Inside here is the exact same thing happening again. Inside, it's not going to let me draw it, but I'm going to try. It's the same thing happening in here. Then the market breaks down over here. Let's try and do it. See how ugly it's going to look. Drop it down to 1 minute. It's not letting me get over there because I've drawn everything too big. All right. But I'm going to make it a green color so we can see what I'm trying to do. In here. And exactly the same thing again. This is going to have a range pushing up here. I'm going to make a different color so we can see it. Blue. Oops. Blue. All right. And then when it breaks that structure again, coming down here. I know it's getting difficult to see. I'm going to fade out this one here because this one's taking up too much eye space. I'll just make it another color, but I'll fade it out. Oops, Looks like I've got two of them on top of each other. Just fade this one out. Because somebody's watching this now and they're getting it. Like, okay, I get what a 10 out of 10 out of 10 is. Because now, on that little blue impulse down here, for argument's sake, with my little, I know it's not going to let me do it now. It's too small. From here to here, you see a little red? I don't want to put it too big. That is going to be your other top. Yeah? That's going to be your top of the top of the top. Trying to get a trade from the top of that range. You get what I'm saying? So now you're looking at, you're like, I'm selling in a bearish market, taking a trade from the, I mean, ideally it'd be better to be, you know, closer to this area here, as close as possible to this top end, but it's not letting me draw it all on top of each other. You won't be able to see it. It's actually getting ridiculous down here. This doesn't even look like a thing. Let me just draw this in by hand. All right. This market going up in here and then breaking structure down into here. Or you're taking a sell in a bearish market from the top section, because this whole area here, one of what I haven't shown you is that little first top. It's not just this on the line. A market split into thirds. This is all sell area. Understand? This is all buy area, and in the middle is do nothing area. So ultimately, even when we're down here taking our top, the top of the top here on our third top, which for might be like with a 1 hour, the 15-minute time frame, just for argument's sake, you are still in the bigger sell area. Just like this little area here is not just a little split, it's like that. This is a 10 out of 10 out of 10 trade. And this is ultimately when you happen to be at the markets and all of these stars align, that's when you get into the trade, you place your stop in a place whereby if it violates that area, it invalidates your trade setup, meaning above a swing high. And then you ride it on the basis that you're not only supposed to be breaking minor structure, but after you make your retracements and your corrections to the market moves and waves, you're supposed to be going all the way to hell. All right. So this is what we have to be able to do. And if this has got messy, I apologize. You know, the limitations of how this trading view lets me draw. Okay. But ultimately, that is you understanding a 10 out of 10 out of 10 out of 10 trade. Now, sometimes you're not up here. Sometimes you're slightly down here and you're getting a little bit close to in an area whereby you're like, I don't really want to do anything in this area. You know, therefore, you're not quite 10 out of 10, are you? You might be at the top of a smaller range or 4-hour range or 1 hour range, but you're not the top of the 4-hour or the daily range. So you're not in that 10-10-10 area. You're in the 10-10-8 area. Okay? And that's what happens a lot of the time when it comes to our trading, that we're not able to every single time be 10 out of 10 out of 10. Like in this particular example, going back to the candles, my 10 out of 10 out of 10 area, have a look. If I was to look at this on a bigger, let's just go to the daily time for argument's sake. Would have been after this market's come down here. Look, let's have a look. I'm going to go to the weekly just so you can see the space. Look how you can see that the market's ping, pong, ping, pong. So, pong up here is my first. There you go. In that red box, I want to be selling. You understand why right now I'm talking about selling? Because I'm in that box right now, which is the top third of the section. Just like if I was in this box, at the bottom of this range here, okay, which subsequently the market's been a bit more narrow. Got a narrower, I'd be interested in buys. Do you understand? I'll be interested in buys at the bottom of that range, trying to make this area split into three. In the middle of this range here, starts getting a little bit yeah. So therefore, that's that area. Let me just put the red one back. That's that area. That's that area on a bigger picture. Just zoom it down some more, just to emphasize and to go what we just said. Then the market's pushed up in this impulse, bullish. But as soon as it starts breaking structure in here, I'm interested in understanding that range. And that range, if it turns around on the 50% level, is going to be the other. Like that. Going to be the top here that I'm be trying to take a sell from if it turns around here in this 50% level. Do you understand? And that will be the other top. And then on a smaller time frame, when I knuckle down in here, and and I see this structure here, and this structure breaks some more, and I can be able to draw another trend line. I'm going to be trying to take the trade from the top of that smaller range, pushing down the top at the top at the top. And if you can understand that, guys, I'm telling you, you can be profitable in this business because it happens in every market. So let's imagine that you don't identify it in this. Let's for example, let's move off this one for a second, right? There's nothing really going on here. Let's have a quick look on a smaller time frame of what's going on. I don't think we're in a rush. Let me get rid of that because you guys understand about the top. I'm going to say pick a pair, any market, and we're going to go and look at it and see where it is. We're going to score it and see where we think it is in regards to this. Have a look at this. We did tap into that 1 hour candlestick zone. Look, we have been pushing down bearishly. We have broken some minor structure here, and the market is pushing outside of this little range, depending on how we've drawn it. It's going to be interesting now, like I said to you, is if this market breaks this structure here. All right, if it breaks this structure here. If it does break this structure here, I'm expecting to see some sort of retracement, and I'm interested in getting in and taking this trade down. Because as much as I believe that this market wants, or in my mind, I want this market to tap into this 50% area, it may not want to do it today. It may not want to do it next week. It may not want to do it, I don't know. But that's ultimately where I think the market's going. And in between that time, I have enough expertise to take the trades based upon what I can see. All right. If I wasn't training and giving you guys education, when we tap into this 1 hour candlestick zone, I may have been on a smaller time frame to try and take this trade just down to minor structure as a minor kind of scalp of a trade, but it's just unnecessary. All right. So we're looking at this. I'm going to pop an alert here just so it can ring once we're looking at something else, so it can give us the heads up. Okay. I'm going to take that trade. I'm going to get alerted by what's going on. I'll also pop an alert over here. Crossing up. Guys, pick a pair, a random pair, and we're going to try and identify where it is in regards to its score, its value. Real quick, that's how we're going to finish up. Anybody, pick a pair that we can go and have a look at and see where we think it is in regards to, is it a 10 out of 10 out of 10? Is it an 8? Is it a 6? Anybody got a particular pair we want to look at? Anybody got a particular pair?
I'm rising. UJ, please.
UJ, fantastic. Let's go and look at UJ. It's the US dollar against the Japanese yen. We still haven't looked at the Dixies yet, but no problem, we will get to it. Now, we can't, you see like this, guys. Anybody who's watching this at home and you open up your charts and it just trading view just happens to be on the 3-minute time frame like this. At this point in time, you don't start drawing lines. You can't start getting into the market here because you don't have a clue what's going on. There's a couple hours of time, if that, all right? You want to zoom out. You need to zoom out and understand what's going on in this market. Zoom out, reset your page, delete everything off here, see what's happening. Okay, so this is UJ on a much larger time frame. Have a look at down this axis here. This is time. So I'm showing you that right now I'm looking at UJ, the United States dollar against the Japanese yen, all the way back to 2003, 2002. All right. And if I want, I can draw in some lines if I want. Okay. Is it going to be that relevant to us taking a trade on the 15-minute time frame? Maybe not, but maybe. All right. I'm going to pull out a parallel line. I'm going to say the market, after whatever it's doing from here, has become bullish, making some highs. Just made a higher high, making higher lows. All right. Now, within that journey, the market's also this is an impulse that just happened here. Like so. I'm going to make it a slightly different color. Okay. I'm on a massive time frame. Every candle is a week. Let's drop our time frame down to our daily so that every candle becomes a day in time. All right. So now I can immediately see here how this market came and pushed up here all the way to this level over here. And then we're back up here at the moment, making equal highs. There's some equal highs. Now, above equal highs, when the market creates equal highs, what happens, guys? Like, what does it symbolize? What does it look like? What does it kind of give us an inkling that might happen?
Liquidity.
Liquidity builds up. All right, liquidity, and liquidity for the people that don't know is just hearing these big words and think there's a bloody hell. Liquidity who? Liquidity. All right, liquidity is just a build up. It's like a pool of money. Because this market, believe it or not, is not about giving you money. It's about taking your monies. That's what it wants. That's what it's designed to do, is to take your monies, take the money out of your hands and put it into their hands. All right. That's how any market works, right? When you go to a market, the guy wants to take your money out of your pocket and put it in his pocket. So he's trying to sell you iPhone cases that he bought for £1. He's trying to sell them to you for £10. That's how the world works. Okay? So it's the same here. So right now, this pool of money is from people who sold, who said, this is a great place to sell from, and they're seeing this equal high and they want to sell from this equal high. It exists over there, that pool of money. All right. So right now we can see this impulse over here, like so. I'm just drawing in regards to market structure, seeing where this market has, what the structure is being created. I'm putting out a parallel line and doing that. It's just a guide. It's a guide on a daily time frame showing me this range, this bullish range of higher highs, higher lows, higher highs, and higher lows. And the question I'm asking myself, look, this market, remember what I said before? It's still in this trend. It's still trending in here. Everyone's wearing baggy jeans still. If I want to get in and start doing some other thing, I need to understand that the trend's going to change. We're going to break outside of this range. So at the moment, this market is still bullish on this much larger time frame. Let's drop down to our 4 hour, have a look. Every time we drop our time frame down, all we're doing is getting more detail. That's all we're doing. People get scared of dropping their time frame. All you're doing is getting more detail. You can't see stuff on another time frame. Now we can see, and I could draw an impulse from here to here, and I'll make it different colors so we can actually see what's going on, of showing how this market has been moving. It's been pushing up in this kind of weird, kind of, ever so slightly kind of start to curve off. In here, we've seen consolidation and some little moves, and some consolidation and some little moves. Yeah, we can see that happening here. But at the moment of this smaller blue range, price has broken outside of it and started to break structure on this 4 hour time frame. Yeah. Started to break these structures, these 4 hour lows, bearishly. Yeah, broke this structure here, boom, pushed up to here. But look at that bigger pink range. We haven't broke outside that bigger pink range, so I just can't get carried away right now and just be like, oh yeah, boom, look, it's broken over that range there. I'm ready to go, and I know it's going to burst through that pink range. I don't know it's going to burst through that pink range. It could have touched right now. Look, bearing in mind, remember, these lines are just lines. Just as easy I draw them as lines, it could be rectangles. It could have touched that pink range now, and now it's ready to go and get that liquidity. Just because it's turned on and it's broken this outside of this blue range, I don't know whether it's going to break outside of this pink range. This just could just be a little bit of a retracement, a little capture some liquidity, a little push down before it decides that it wants to continue pushing up. I do not know. But what I do know is if I want to take money out of the market on a daily basis, I must trade what I see. So what I can see here on the 4 hour time frame, have a look, is that this market pushed up here, broke structure, and it created this range here. This impulse here, pushing down, making 4 hour lows, 4 hour highs, 4 hour lows, lower highs, lower lows, lower highs. Now, where might this market be retracing to? Let's pull out a little Fibonacci. Let's do this. Let's go on a Fibonacci. 50% level looks interesting. We are at a 50% level at the moment. All right. At that 50% level, I can see some points of interest. I can see how the market over here was dancing around here. And, I'm making it a little bit wide, this area, because we've seen this little top area here, in this little area here. Now, is that enough for me? Definitely not. Definitely not enough for me to be like, yeah, let me get in and do a madness and try and sell this market. No, not yet. All right, not yet. Okay. Because I can also see some other concerns. You can see some other concerns in regards to this market. I'm talking about if this market actually wants to come down and it's breaking structure, the 50% retracement on the basis wants to come back down here and start breaking structure. Even in that school of thought, can anyone see any immediate concerns in regards to this market possibly turning around here or not? Can anyone see any immediate concerns?
Yeah, there's an imbalance above.
This little imbalance here, even if it wants to turn around, and that idea that the market's going to come down here and it's going to start going to hell, this imbalance in here, imbalance, is a concern. Because the market doesn't like imbalances, doesn't like inefficiencies. So we might see this market push up into here. It may want to start turning around and breaking structure. All right, so now we're on the 4-hour time frame, which is a good time frame for us as day traders to get some information to understand what's going on. So in my opinion, we've seen some break of some minor structure in here. This is minor structure. There's a high and a minor level. You can't see it. You go to your line chart. You look for the top of those little mountains. Look at that little mountain situation happening there. We can see this little level here hasn't quite been broken yet. This is all structural areas on a 4-hour time frame. All right. The line doesn't take in consideration the wicks. Okay, like that. So at the moment we haven't broken this structure, but we might see a little bit of a push up here into this imbalance. So personally, like this, I'd be placing my alerts here. Add an alert crossing up, and when we do tap into this area, if we do, then I'll be dropping my time frame and looking for an excuse, a reason to get in. And I'm talking about a reason to get in and then trade into structure. It's nice to say you're going to trade to help and trade, just going to slow down and just keep selling for the next 6 months. But you have to trade to structure. And I've identified to you what these structure levels are, because don't get it twisted. This is the 4-hour time frame. Just between this high and this level here is 4, 8, 12 hours worth of trading. Half of your day. All right. So let's have a look at what's going on right now. Okay. So we've identified that if this market wants to come down here, this is a 50% level of this market rolling down. I'm just not sure because of this range here. Because overall, when we zoom out, this market has been bullish. It's a bullish market. Can you see why this structure is so powerful to understand where you are? Because someone else is just like, listen, I'm selling it down now, Jay's going to go to hell. I'm like, maybe. But it hasn't broken outside of this pink range. So how do you know? Look, if that was the case, when this market came down here, look, go to hell. Why wasn't you selling it down and saying you're going to go and take it all the way down here? Why? Because the market came all the way down here to our pink line and then did what? Boom. So what's different now? What has changed? Especially the fact that I've already said that there's liquidity up here. Even more reason why this market might want to come up here. All right. So let's knuckle down. So me personally, right now, I'm more safe for a buy in this market up into this liquidity. That's really what my energy is for. So if I was to slap in what my thought process is this. Until we break outside of that range and start breaking structure, this could be the only thing that I want to do. Because the market, look, has only been doing that. Look at that bigger yellow range. Look at the liquidity above. Look at the higher highs and higher lows. Higher highs and higher lows on the daily. Higher highs and higher lows on the 4-hour. This little 4-hour break over here, this little break at the moment on the 4-hour time frame, breaking some structure. Oh, yeah, broke some structure. I hear you. But now we've started to break structure to the upside. Look, on a 4-hour, it came all the way down here. This is structure. Now it's broken this structure here. Boom. Yeah, and it's retraced and it's been pushing up. Let's look at it on a 1-hour time frame so you can see it a bit more clearly. Look how clear that looks now. It's making higher highs and higher lows, and higher highs and higher lows, and higher highs and higher lows. So at what point am I going to be doing the opposite? At no point. At no point am I doing the opposite. Yeah? Answer to your question. At no point. All right. Let's put it in as yellow. Okay. Why did this market come all the way down here into this level? Does anybody know? Does anybody have any reason why this market might have come down into that level? Look, it pushed up here. Tapped into that little 50% area that I was saying, and potential little thing like. Is there a reason why we can see where maybe that market would want it to come down and push into this level? I can see it. I can see it. If I was there trading down, I'd be like this. Yes, we've broken this structure over here. I get you, but I have to if I'm going to get in, I have to put my stop below this level. If I wanted to get in at this point, for argument's sake, I just thought to myself, yep, we've broken structure, made sure retracement was closed above. Have a look. I have to put my stop below this level because there's imbalance in here that needs to be filled. If I was even in that instance, and if I had done that, I would be blessed to have done that because that market came in there and closed that imbalance. And now on a smaller time frame, look, because obviously this created an impulse, a range, a push down. And now if I really wanted to get into that trade early, maybe that's why Alan told me to have a look here, because he's already interested. This market on a smaller time frame, on a 50-minute time frame, has come down, closed the imbalance, and then started to break structure bullishly on the 50-minute time frames. Watch, breaking this structure, which is swing structure, breaking outside of the range, retracing, close. Guys, take the buy. Yeah. If you're interested in it right now, I think this is a trade you could take this buy right now. The candle is just about to close in the next 5 minutes and 48 seconds above this level. Even on a 50, and that's a 15-minute time frame close, with your stop potentially below these lows, which is a higher risk stop for 30 pips. Safer stop would below the swing for 45 pips. I say you could take the buy. There you go. I've said it. All right. I'm gonna open it up now on my trading my MT5. All right. I'm gonna open it up on my MT5. Let's go here. Let's go view. Let's go market watch. Let's go find UJ. And even though it's a pair that I don't trade because you can manage your risk, I've looked at it and from a perspective of market structure and price action, it looks okay. Now the question I haven't asked, and I haven't asked the specialist himself, is what is happening from a fundamental perspective in regards to that market?
Yeah, Jay, there's inflation tonight for UJ. That is why you're seeing the yen kind of gather steam, and potentially next month. I mean, we've got lots of interest rates next month. I think the 12th, 13th, 14th, and 19th are the big four. Potentially, they're going to go in a different direction. I said that last time, but the market is awaiting with bated breath that the yen moves a different direction. As I said, I believe the Japanese economy is up the third or fourth largest in the world, so it's really, really important. So inflation tonight.
There you go. So this push, even if we do have this push here, guys, this push, as mentioned, might just be a push. Let's go, let's zoom back out. Let's zoom back out. Might just be a push up here to capture this imbalance before this inflation news kick in or something like that, and we do something else. Maybe. Maybe, baby. But I'll tell you how I trade, is I trade my bias and I trade what I see. Because by the time, what time is the inflation news coming out there? Do you mind me asking, Al? So we can go look on.
Yeah, it's late. It's probably about 11:50 or 12 o'clock tonight.
By the time midnight happens, UJ is going to move. Let's go and see how much UJ moves. Let me show you guys some resources. So first,
11:30, Jay, 11:30.
Fantastic. So my FX book for your red folder news, understanding that there's some inflation information coming out, yes, at 11:30, fantastic. But also we can go and we can find some daily ranges. All right. Which one do we normally use for our daily range? I always lose this website. Yeah, I need to bookmark it. I'm gonna do it right now. All right. I don't know, daily range for FX. None of these look familiar to me. I'm sure my FX book's got one, to be perfectly honest. I don't want a calculator. Guys, it's really bad. What is our average daily range? I don't think it was this one. So it's highlighted like I clicked it before. I'll just click it now. Is it Forex Factory? No, they're telling me about an indicator. I don't want, that wasn't a Forex Factory. It's not this. I'm gonna find it. Is it? No. The joke is, I know, but I've bookmarked it. I'm sure I've bookmarked it already. Range. This isn't the one. I'm just looking at their one because we use my Forex book for a lot of other things. And let me just check something so I can see whether or not I'm reading this correctly. Where's GU? Yeah, cool. So basically the average daily range is about 110 pips, I believe, of UJ. All right, so let's measure that out from where we currently are. Looks good. Looks good for today. All right, let's go and get our cashback Forex and see what happens. Let's see what happens, because that candle on the 50-minute is just about to close, I'm sure, or it has already. Need to look over my shoulder. Guys, we always calculate our risk. If you're not in here doing this before you take a trade, unless you know a particular market, and I don't know US, UJ, you must be in here calculating your risk, because you're not going to know what lot size to put in. You're not going to know. You're not going to know off the top of your head. All right. So, that range I was looking at was, best case scenarios here. I said it was, worst case scenario is about 45 pips. So you need to understand how much money you're willing to risk, and that is going to be your lot size. All right. It's that simple. That's how you do it. There's no other way that you do it. It's that way. Yeah. I'm going to take the trade. I'm going to take it as I've been talking to you about it. And the candle's just closed on a 15-minute time frame. In fact, it's closing on a 15-minute time frame. That candle is closing literally in seconds. Yeah. And that's on a 15-minute close. And we're above here. This close was a little bit, but this close is correct. No problem. I'm going to get in. I'm going to get involved. We're going to get involved. We're going to see what's happening. What's happening there? And I'm wondering, where is my trading tools? Oh, I've selected the wrong pair. Give me a second, guys. Give me a second. Oh, tell us some more stuff about the news that's happening today, please. Just tell us what's going on today, if there's anything else that we need to look out for, anything else that we want to understand. Give us some more information or feedback about, what that Japanese scenario could actually mean to the markets.
Yeah, today's a bit of a quiet one, to be fair. 1 second, let me turn my TV down. Give you a moment.
No problem.
Yeah, today, it's Thanksgiving today. So the American market will shut very early tomorrow, Black Friday. However, regards to the Japanese yen, they've had negative interest rates. So the market is waiting for them to do an about turn, but it's taking a bit of time. So let's see what the inflation rate is. If inflation starts going up, then they will have to put interest rates up, and that's the thing, as other major economies have done. So it's going to be interesting to see what plays out tonight, because as I previously said, I reiterate that December there's lots of new interest rates. The big four, the Fed, the Bank of England, ECB, and the Bank of Japan, in a matter of 7 days. So yeah, today, there's some manufacturing news, but due to the fact that it is Thanksgiving, the market's going to move a bit slower today. The volume's not going to be as much as previous days. So today and tomorrow is a bit slower. So but as I always say, all data points are really important, and that is what the Fed are looking at, is data points. So is the Bank of Japan. Yeah, I reiterate, if inflation starts going up, they have to do something with the interest rates. That is why it's so important tonight.
Let's have a quick look at the Japanese yen index, all right, guys, which is the JXY, all right? Call it whatever you want to call it, JXY. What's ringing? What was just ringing there? Who's that? What was just ringing? Yes, UJ, all right? Let's go and look at the JXY. JXY. We'll finish off like that. We have run over a little bit. Let's delete stuff off of here. Let's see what's going on to the break it down. Tells a story. Tells a story, right? Let's go to the weekly. Tells a story, right? Have a look. We'll draw some lines in here. How? 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 Tells the story. This market has been bearish, has been going to hell for the reasons that I'll just explain to you. All right. And, even in this narrower impulse, we can see the market's getting a bit narrow. There's a little narrow impulse happening in here. Kind of in that equilibrium phase of that bigger range of, is the market going to go up? Is it going to go down? But ultimately, at the top of this smaller blue range, where it's kind of still at the top of this blue range, we've been dancing at the top of this larger blue range. When I say larger blue range, I mean this and this. Okay, but we've seen it narrowing, making this the floor. So on that basis, if I zoom right in there, let's go to our 4-hour time frame. This market's kind of in the middle of that kind of narrower range, meaning that, yes, is it going to gain strength? We don't know because of the news later. Is it going to lose strength? We don't know. We don't know. But overall, that market has been bearish. Yeah. Weak, losing strength. All right. We have seen some little action going on at the moment. Let me put this line chart. Some little stuff. The market broke some structure bullishly here. Came back down into here. Maybe it's a sign that the market's going to be gaining some strength. Okay, as it's broken structure. Look, it's broken above these levels. Bang. Made a retracement. Bang. Is it going to go this way? I don't know. It's in the middle of a range. So I don't really like it. It's kind of doing it XYZ. And I think, like you said, we understand why maybe people are waiting to hear the news, hear the kind of what's going to happen for this to either gain some strength and do this or go this way. All right. We shall see. Guys, good morning, good morning, good morning. Thank you for being present. I hope we've learned some things in regards to this strategy, understanding how these markets move, understanding the fractal nature of these markets, all right, understanding how we wait for confirmations, understanding that when the market's within a trend area, another confirmation is when it breaks outside of that trend area, because this means it's doing something different. Now, the market could, don't get twisted, could break outside of it and then just decide to consolidate for a little while. It could do. And if that's the case, you may take an L, but it doesn't matter because you have managed your risk. You only trade what you're willing to lose, okay? And that should be within your risk. And you understand that, look, have a look. Man turned his back for 2 seconds on the troublesome GU. Watch it now. Yeah. So I was saying that I didn't want to get involved here for the sell. Yeah. This is what I was saying at the start of the session. I said we tapped into a 1 hour candlestick zone. I said we pushed down here. What was my exact words? Is that I do not know whether or not this market is going to come and tap into this range here and then boing back up into this range here. That's what I was saying. So I don't know. The only time I do know as a confirmation, or I can get a confirmation, is if this starts to break outside of this zone. This is what I said. I said, if I took it on a smaller time frame and was tapped into this 1 hour zone, I'd have to trade down to structure because yes, maybe have a look. Maybe we can, break out. We've broken outside of this minor structure. Remember, I was just saying it. Yeah. I said, maybe we've broken outside of this structure, which is great. Look, we're in profits here. I said, maybe look, I drew a little orange yellow circle. It's still there. Rewind the session. And I said, yeah, we can get our profits like that. But when we get to the next structure, i.e. our bigger yellow line here, this bigger structure, I don't know what it's going to go and do. And look what it did whilst I weren't looking. Wow. Yeah. All the guys that were like, yeah, but I'm selling this now. It's going to hell. No, it ain't. Boom. Yeah. If that isn't an example of understanding the structure and why we trade in the way that we trade and why we wait for confirmations and why the strategy is so powerful and why what I'm teaching you is correct, is that it's happened right there and then. Someone else was like, no, Jay, you don't know. Look, the market broke, pushed here, broke this structure. It's coming back in here. I've identified here as an area to sell from. Boom. And I'm going to take, look, it's had a reaction for the 1 hour. I'm putting in everything. Maximum lots. And I'm selling it. Nah, friend. Nah, mate. Not me. Now, this has answered my question. I said, is this market going to close below here? Or was it going to close below here? Wherever that line's gone, I must have deleted it. All right. Look, it's pushed. It's pushed up here. It's grabbed the liquidity from up here. To be fair, it's actually grabbed the liquidity. So right now, what I think is going to happen is this: liquidity's been grabbed, comes back down in here. As we know, once it grabs liquidity, it likes to run in the opposite direction. We're already over here. All right. And then I actually think we're going to go again. I said I don't know if this is going to get up into this level unless we still see some quick old spikes. That was a big old spike. Don't know where it came from. That was a big old 60 pip spike. If I wasn't teaching, maybe I would have seen it. Go on.
I do. Manufacturing news was positive. That is why. That is why it spiked up. Look at the side. Refresh your screen. No, yeah, you got it there. 50. Anything over 50 is very positive in manufacturing. Anything below 50 is that we're, very, very negative. So 50, above 50 is good.
And then made that.
Also, the other one was 46. That was better than expected. So that is why we had that.
Bullish. All very bullish for the pound.
Yes.
You see it? So if it's all very bullish for the pound, this is when we're combining our fundamentals. Just because I've seen this spike, I'm not selling. The fundamentals is bullish for the pound. Do you understand how this entices the traders? Because let me tell you something. There's some trader that got really carried away. Boom. Wanted to sell from up here. Just hit the button. Boom. And maybe they're in some profits now, yippee-ki-yay, but take them profits and put in your pocket, rude boy. You better put them pockets in your that profits in your pocket. Because I think to myself that there's a very high possibility that this market could come back down into this levels. Worst case scenario, get very, very deep in here, all the way back into here, and go this direction. All right. So at the moment, I can't get involved now. I missed the spike and whatever it may be to say, blah, blah, blah. But at the moment, like I said, I want to sell from up in this 50% area. I would love to be able to get in, buying into this area for, 90 pips would be great. I don't know now. I'm looking at this structure now. We had this big wick come back down here. This is on a 1 minute time frame, seeing this structure. On anything larger than that, you're not going to see anything. Okay. Look, on the 5 minutes, you can't see anything. But yeah, the fact that we've broken this structure for here, I don't know if the market will just want to tap here and then push all the way back up in here, leaving this imbalance wide open for when it's going to come back for it. You got to start thinking to yourself, if you was trying to take money off retail traders, how would you move? Sometimes you don't do the obvious. Now, the biggest energy of it turning around here and selling off, it's not going to start mucking about with that. Like, I've sent you to Stratford. You're not going to start driving the opposite direction. But if you wanted to throw me off your course on the way to Stratford, you could zigzag. You could stop. You could do something else. You're going to start driving to Birmingham. Do you understand what I'm saying? Yeah, that doesn't make sense. But if you wanted to throw me off a little bit, you probably wouldn't. You don't have to drive straight down the A127. Yeah. You might just do a little, you might go in town and zigzag and stop at the traffic lights and go left and go right, go check a brethren, go to the shop, go stop at the petrol station. And if I was looking at it on the GPS, I'm like, what is this person doing? I don't know exactly where they're going. And that's how you get those retail traders and you take all their monies because you don't know exactly where they're going. Yeah. So like I said, you did that. My bigger bias, once I place my stop and I get in the right place, I don't expect it to do a madness, a huge bit of crazy manipulation. But in regards to all of this stuff happening here, this is what's throwing the traders right now. I'm telling you, there's traders that try to hit the button. Everyone wants to hit the button after a spike. Try and get massive profits very quickly because everyone's in a rush. But I'm looking at this here and I'm concerned about what? What am I concerned about? In fact, let's use our little tool, see what our tool does. No, that's not the one. What am I concerned about?
Imbalance.
Exactly. I'm concerned about that imbalance. Now, I don't know whether the market wants to come and collect that money right now, but I cannot just get in here right now for the buy. If I do, I've got to put my stop all the way down there. So why would I want to place my stop 40 pips away instead of just waiting to see what happens? If this market now comes here and pushes back above this level in here, above this wick high, I'm not going to be getting in for the buy. Why? Because my bigger bias is at this green line here, this 50%, we're turning around. So it doesn't make sense me turning around saying, yeah, I'm going to get in this trade here with my stop below this level here on the basis we're going here. What's the point? Might as well just wait. We're just close to the place where I actually want to take the trade from, which is a big sell from this level. All right. However, if this market pushes down here, we'll go to my 1 minute time frame, starts creeping down to where it broke this structure, where we saw the strength and speed kicking in. And then we get all the way down into these levels and I start seeing the market breaking structure on a smaller time frame, depending on how long it takes to get down there. Then maybe, even though I want to sell the market on a, ultimately, but might not happen today, I may take this trade against the much, much bigger trend, not the smaller trend, like that. Because that looks like an interesting trade to me. Maybe placing your stop below these swing lows. Looks like an interesting trade to me. It's that 1 to 6, 1 to 7. Who knows? It's not. It might not turn around on that 50% line. It might push past it a little piece. Might be some liquidity, some imbalance, some gaps in the market just then. Either way, guys, good morning. God bless. All right. I'm glad that we've seen that. We was able to understand the reason why I turned around here and said, yeah, I'm not too sure about getting in here because we haven't broken. And this is showing you the importance of these trend lines. Not because they mean that as soon as it goes there, you just hit the button, but because it gives your eye, it reminds your eye that you're still within this trend. Do you understand? It reminds you that you're still here, you're still there. Because when you're zooming in, you can lose your world because all of these red and green candles look the same on every time frame. If I didn't have this time frame up here and I was on the 12 month and it didn't show me the time down here, it could be the 1 minute. You'd never know because they all look the same. So your brain, when you start to look at things at the 5 minute time frame, all you start seeing is red and green candles. You're just in this little red and green candle world. You're thinking, oh yeah, look at this imbalance, okay, but you haven't seen the bigger picture. The bigger picture is on the larger trend. We're at the top of the range or at the bottom of the range, which is for sell or buy energy. But you're just, oh yeah, I'm selling it, man. I'm selling it because I can see all these green, red candles. But you're selling it into a war. You're running into a war. The only time you can go and do that is when you've broken through that wall, i.e. broken outside of the range, and you see breakout structure, then by all means go, run that direction. But which lunatic wants to run headfirst into a wall without knowing that they can get through it? I don't. Guys, good morning. God bless. Thank you for this session. Anyone who's watched the video, please subscribe. Do this every morning. Yeah. Like the video, share it. Okay. So that you can understand this skill. I break it down in a simple manner, talking about market structure, price action, letting you understand why the markets retrace, using metaphors and analogies that's going to let you to remember when you're looking at the charts to do these things. Okay, so ultimately you can be empowered and learn how to trade the financial markets and at least understand what's going on in the markets and not just see these as candles, not just be wanting to get signals, yeah, from somebody else to give you your food, yeah, for you to be able to look at the markets and be discerning and come to some sort of opinion. Guys, I might be wrong in this whole narrative of it wanting to push up to this 50%. I don't think so, because from the start of last week, it's been doing that, and it's still doing that. However, I still need to believe in something. I still need to have some sort of basis and premise to be able to analyze the markets and have some sort of conclusion, some sort of idea, because that pro trader who's online and he's driving around his Lamborghini, he's wrong sometimes. So he's going to turn and say, no, guys, I'm selling this to pieces. And when it goes and it's bullish and it's pushing up on the idea, the analysis that you thought, that you came to, he's going to be like, oh, okay, no worry, that's an L, guys. Don't worry about that, man. Keep it moving. Because he doesn't know either. Nobody knows. We can just all form our opinions based upon what we see and the level of our education. Well, guys, good morning. God bless. We're going to play something powerful on YouTube. And we're going to stay in a session. You know how it goes. Well, guys, do like and subscribe to